So first of all, sum up the numbers. We're going to get into this issue about not releasing the numbers for iPhones going forward, but earnings, revenue, overall, what's your take?
We see this as a very, very strong quarter. Apple's been growing now for 8 consecutive quarters. They made $63 billion of revenues. The iPhone shipments was the disappointing number, 47 million, roughly the same as last year. But the two key standouts for these earnings were, one, average selling prices went up to $793 per iPhone. That's 28% up on last year. And two, they're reducing visibility of average selling prices in future by combining this iPhone, iPad, Mac number.
And that reduction of visibility going forward was what dominated the earnings calls. All sorts of analysts sort of upset about that and therefore trying to second guess why they're doing that if they're going to try and hide something going forward. What's your take? Is that an overreaction? Because that's really what's weighing on the share price,
I think strategically, I was surprised that Apple did that. Perhaps they're worried, but from what I can see, in the short term, Apple's a strong company. There are medium-term risks, and we can look at those later. But in the short term, I think Apple's quite strong. I can't see any near-term competitor knocking them out. And the key figure in these results that confirm that to me is the ASP going up 28% to $793.
But I guess that's why people are raising questions. iPhone sales themselves, as you said, are flat. The key thing there is that the prices are going up. So why are they now going to hide the detail on that number? Does it suggest that they're worried that the number can't keep going up as much as it has done?
I think it's a combination of things. In the event on Tuesday, we saw them promoting the iPad Pro versus the Mac. So maybe the Mac numbers are falling and they're phasing that out. But essentially, all these devices are run on iOS. So to me, they're one product. The market sees them as 3 separate products, but really they're one product as far as the operating system goes.
Step away from the iPhone sales. What were the rest of the numbers like in terms of the much focused on services and China sales?
I think services were doing well. I think China is the biggest risk going forward. So when we look forward, we've got 3 areas of kind of analysis. We look at tech themes, we look at regulatory themes, and we look at macro themes. And macro themes, the China-US trade war issue is the biggest risk for Apple. China's 20% of Apple sales. And, if that trade war escalates, then Apple's going to get a double whammy.
And to sum it up, you've got a buy rating for us on Apple?
We don't do buy and sell ratings anymore, but on a short-term basis, very strong. We think it's going to bounce back. On a medium-term basis, 6 to 12 months, the biggest risk is 2 technologies Apple's falling behind in, augmented reality and artificial intelligence. And
then just to round things off, outside of Apple, the other sort of major FANG names, of course, pulled back sharply in this recent pullback. Do you think that's overdone for the sort of group as a whole, or is there one that sort of stands out that shouldn't have been brought down as much as the broader market?
No, we went into this earnings saying Microsoft was our strongest candidate. It's done well, but Intel's done well as well. We think the biggest thing weighing down the big tech stocks is going to be regulation. Facebook is probably the prime candidate to get hit there, possibly Google a little bit, and possibly Amazon on antitrust issues. But essentially, we think on a long-term basis, all the big tech stocks are going to do well.